when we looked at the consumer credit space in the UK in 2006, we saw a huge consumer market, but one that really needed to be disrupted. And it needed to be disrupted because consumers were getting a raw deal. It's a big market. Just unsecured personal loans in the UK accounts for £50 billion a year. And it's a market where the internet, where mobile hadn't made itself felt. It hadn't disrupted the space. People were still doing business in the old way, with stores, with people door to door, and with call centers. And this was the last market we felt that was really sizable, that technology and data and a consumer-centric approach just hadn't been born yet. And we set up Wonga to really focus on this opportunity. So I think to understand this space, I think one needs to understand the nature of the demand. At Wonga, we started out by focusing on the small, short-term area within consumer finance. And the reason that there is a demand is that most people in the societies that we live in are on fixed incomes, but yet their outgoings are much more volatile. And so this solution that we built at Wonga for helping people to migrate through those peaks and troughs of their personal finance it's not a subprime phenomenon. It's a phenomenon that occurs to lawyers and to doctors and to entrepreneurs and to bus drivers and to people who are on salaries without enough savings and where their outgoings are not as consistent as their inflows every month. And it turns out that that's a very significant portion of the population. People have had many solutions to deal with this problem, and people have created their own solutions over the decades and centuries since people have had this problem. And people in modern times have used additional credit cards and long-term loans. They've gone over overdraft limits. They've not consumed what they wanted to consume. They've borrowed from friends and from family members. People have found different ways of solving this problem. But the really big player in these spaces, certainly in the UK, but in many countries in the world, are the banks. And the banks, to put in perspective, use mostly overdraft late fees as a product for solving this problem. In the US, over $30 billion a year is spent on overdraft late fees. In the UK, it's over £3 billion a year. So very significant revenues are come into these banks, specifically trying to or helping people solve these problems. Now, the problem that banks have had is that they've had massive political and social pressure over the years to provide solutions that aren't commercially realistic or viable. So in the UK, there's free current account banking. Now, we all know that it costs money to run a bank and to provide the services. So the way the banks finance that and pay for that service is through charging people extortionate amounts for overdraft late fees, by selling them products that they don't really need or want, like payment protection insurance. And so there's a massive lack of transparency in this market. And what's interesting when we looked at it is that the banks weren't alone, to be fair to them, that most of the finance industry, and certainly all of the consumer finance industry that we looked at, had something in common, and that's that they didn't put customers at the center of what they were doing. They'd forgotten why they existed. They'd built products over the years that were good for them, but not good for the customer. And so the ultimate reflection of this is really where they started treating good people like good customers like bad customers and bad customers like good customers. And so in this environment, we understand what a freemium model is, right? And the banking model, the retail banking model effectively became a freemium model where most of their customers they were losing money on to service, and they had a financial incentive to make good customers, i.e. customers that didn't need a lot of credit or who paid back on time or who paid their credit card off every month, they needed to make them bad. And they had a financial incentive to take these very good customers and treat them badly. And equally, customers who we think of as bad, potentially, who may have consumed more credit than they wanted or not stuck to agreements, were actually the best customers that the banks and credit card companies and payday lenders had. And so the essence of Wonga was a thought when we looked at this that said, you know what, let's dare to be different. let's put the customer at the center of our solution. Let's think about how, on a whiteboard, we could design a solution that was really good for customers and that helped them bridge this short-term cash flow gap that they had from time to time. And so the way we did that was primarily by focusing on technology and data. We looked at what was available in terms of public data, what was available in terms of internet technology and mobile technology, and we brought it to bear on an old, established space where people were using very mundane and very manual processes. And so to put in perspective, when a customer comes to Wonga and makes an application for a loan, which is a very quick process, we go off and collect multiple thousands of pieces of data in fractions of a second and decision it through a real-time risk platform that is generations ahead of anything that any of the banks in the UK have. And that's, and we've built a platform that is fully automated for the first time and lets us run the entire loan process from the application through the decisioning, through the provisioning of cash, and getting it back out again in a completely seamless, automated manner. And that's a world first. The second insight, apart from using technology, was to think about whether we could create a model with transparent pricing that then let customers take full control of exactly how they wanted to bridge this problem for themselves. Almost cash on demand. So how could we create a system where customers didn't need to take a loan for at least a year or at least for £3,000 just because that's what suited the bank, but rather put the customer in control where they could take a loan for the exact amount that they wanted, for exactly as long as they wanted, and choose the price and choose the terms that they wanted to deliver. And that's what we did at Wonga. So customers at Wonga create their own products on the fly every time they come to Wonga. And there's no pricing incentive for taking more or taking less. And on top of this, we do free early repayments. So we offer people the ability, even if they've chosen to take £147 for 7 days and they have funding available in 4 days, to log on to Wonga, pay off in 4 days and only pay for those 4 days without even an admin fee. And a significant minority of our customers do that every month. And that's, in our mind, that's about creating a customer-centric offering that lets people solve a problem for themselves on their terms. So, we grappled for a long time around responsible lending, around how could we deliver a solution in the space that was truly responsible. And we derived 3 principles that are still very much at the heart of what we do at Wonga and how we operate the business every day. The first is transparency. It's making sure at a core level that every customer that comes to Wonga and takes and uses the service really knows at that moment that they're taking the loan exactly what they're getting, exactly how much it costs, exactly how long they're going to get it for, and see the full picture in one go. So you saw on the previous slide, we show people the total cost of credit. We show them the exact amount with no hidden fees. Anything else. It's that true transparency, and we'll see some of the customer response data later on. You'll see how much people appreciate being treated as equals and getting access to that information for the first time, really, in financial services. The second principle is really flexibility and control. It's that point around letting customers choose what they want on their terms, taking a loan for £150 or for £11 or for £92 and for 3 days or for 13 days, just what they want. And from a responsibility point of view, I really believe that we shouldn't encourage people or force people to take any more credit than they want for any longer than they want it for. And that's something that the banks and payday lenders and pawnbrokers and credit card companies will need to come to terms with. They can't anymore kind of just make product up on their terms and expect people to consume it, in my view. The third element of responsibility for us is selectivity. It's genuinely trying your best to use systems to only provide these services to people where it's in their best interest to do that. And at Wonga, we try to solve that by aligning ourselves perfectly with our customers. So we built a business model that allowed us to be profitable and be transparent at the same time. So we've got no incentive whatsoever for people to miss their payment date. In fact, I'd be the happiest guy in the world if every single person paid us back exactly on time. So we've got no incentive for people not to pay us back, and we spend an inordinate amount of our resource on trying to align that decision up front by only accepting customers where this product feels like it's appropriate for them, and by, and connected to that where they'll pass back on time. To put that, to make that concrete, we accept less than a third of our customer applications. So the vast majority of customers we don't accept because we don't feel that at that particular point in time this is the most appropriate product. So it's a highly selective product in terms of how we operate as a business. So I think the things that people love about Wonga, the essence, it's speed, and that leverages our technology platform. So the fact that there isn't a call center and there aren't manual processes in between mean that we deliver cash into people's bank accounts 24 hours a day and guaranteed within 15 minutes. So people can use our various whether it's the iPhone or the Android or the web to access the service, and literally walk across the road to the ATM and get the cash out. And what we've understood from our customers is that these aren't long-term endemic debt problems that we're trying to solve. We're solving short-term, small problems for people, but they create stress and they create challenges for people individually, and solving those problems quickly is of massive benefit to them. The second element from speed is convenience. So it's allowing the customer to engage with us on their terms, and not forcing them to come into a branch or to wait for someone to come and visit them. But it's to keep the service available to them, and obviously online is the core of it, and mobile is growing. And over time, the service will become more and more ubiquitous as we allow customers to interact with us really on their terms, exactly as they prescribe that. So just to conclude, the technology platform that we've built and our approach to responsibility and to transparency has allowed us to scale the business in a way that's fairly unusual. And that's interesting. But the thing that I'm most proud of is the fact that we've been able to do that and absolutely delight customers along the way, because we're offering them something that they haven't had access to before, and we're doing it in a fresh and innovative way and putting them at the center of what we're doing. And the reflection of that is, in our Net Promoter Scores, for example, for those of you who use them in your businesses. But it would have been easy enough to compare ourselves to the banks. But people hate their banks, so it's a fairly low bar. And we weren't in the business of creating a new business to be slightly better than the old incumbents. So we look at the great consumer champions at Apple and at Google and at Amazon and those sorts of companies. And I'm proud to say that we've gone into a space that's controversial, it's traditional, and we've used technology and we've used an approach to responsibility to innovate enough that customers put us at that level in terms of how they think about the business and how we meet their demands. So thanks very much for your time, and have a good evening.